Correction of errors is a very important area in our syllabus. Many students, they struggle. Even if you ask from grade 11 students, they have joined to the class today. They say it is very difficult. But actually, I say it is very easy for you. If you know the method correctly, what I am teaching, if you follow the method correctly, then you can easily understand the correction of error. It's not a big deal, my dear. It's not a big deal. So, business and accounting studies, let's come to the notes. I have sent you this tute early in advance. I hope all of you uh, uh, so when you come to the point, I have sent you this tube to copy, photocopy, and take the printout and write it and keep if you can't take the photocopy, right? First of all, general journal. General journal. Now, don't think that we can do accounts only by attending the class. It won't work for that. Just by only attending the class, if you can do something, if you can learn accounts, then you are genius. That's what every day we are sending. I am sending work to you. Now, every day means don't think, every day should I send the answers? Not like that. Every day, if you analyze the time, maximum it goes to 15 minutes. So we have to go for just a 15 minutes time uh, to do this works what I'm giving. Sometimes it won't take that much time also. The online MCQs, then that and all, 5 minutes, 2 minutes, 3 minutes, sometime it finish. Now I send the question, within 5 minutes some answers come. Some students, they quickly send the screenshot of the answer marks. So it's not burden, I feel. Okay, I won't give very big works. Only once in a week I give around 10 questions like that. That's all. 15 minutes maximum. Right. So if anyone could start. General journal. I hope all of you copied these questions and copied this, took the printout or else written the headings. General journal is a parliamentary book used to record any transaction which cannot be recorded in other parliamentary book. General journal is a parliamentary book. Parliamentary used to record any transaction, used to record any transaction which cannot be recorded, in other parliamentary books. What is general journal? General journal is a parliamentary book used to record any transaction which cannot be recorded in other parliamentary books. Which cannot be recorded in other parliamentary books. Can you note it down, everyone? General journal, note it down, everyone. Next one, double entry. What is double entry means? Double entry means, simply say, what is double entry mean? Double entry mean recording two entries as debit and credit is called double entry. Recording two entries as debit and credit. For what? For the transactions. So simply say, to understand easily, what is double entry? When a transaction is given to you, recording two entries as debit and credit. First of all, learn the accounts easily. After that, we can go for the definitions. Sometimes at once when we learn the definitions, we can't understand anything. So you learn accounts first. What is double entry? Double entry means recording two entries as debit and credit. That's all. Simple matter. So note it down, everyone. What is double entry? Recording two entries as debit and credit. Note it down. Recording two entries as debit and credit. Double entries in accounts. Double entries in accounts. Okay. How to write double entry? When you come to double entry, I used to divide all the transactions into two. One is tangible, other one intangible. That means one is you can see something tangible, you can see, you can touch, you can catch. That is tangibles. Furniture, cash, vehicle, building, land, cloth. These are tangible things. Second, intangible things. Intangible things are you cannot see, you cannot touch. Can you see the rent? No. Can you see salary? No. You can see cash. You can see money. You can't see salary. Discount allowed. Discount received. You can't see. Insurance. You can't see. So intangible. So when we come to double entries, my dear students, I used to divide the double entries into two. Double entry rule for tangible thing, double entry rule for intangible things. This is very important for us to deal with this chapter. If you are familiar with this, it's very easy to us to deal this chapter. Even though we learn this in early in advance, before the cash account, again we need this idea to come to the understanding of, to come to an understanding of correction of error. So first I am taking tangible things. What you can see in this screen? What you can see? Can you tell me in the chat? So this is a business. This is a business. Many of you see shirt, t-shirts, jacket, staircase, everything is there. But all in all, simply say it is a business, it is a shop. Then when we come to the accounting part, my dear, I always advise you that business, when we do accounts, business means we. Business means what? We. So we always take, we are inside the business. We are inside the business. We are not owners, remember. We are accountants. We are preparing accounts. We are accountants. So we are inside the business. That's what I put, we inside the business. Got it? Right. Now, when you come to double entry system, tangibles, any tangibles, if it is come inside the business, tangibles coming inside the business, we will debit to that particular account. Any tangibles you receive, that should be debited to the particular account. For example, cash received debit to cash account. Cash received debit to cash account. That's what the sentence you have to learn. Easily you can learn. Any tangible received to be debited to that particular tangible account. So don't memorize the sentences. Just remember the picture. You can note it down in your writing book as it is. Right? So when we receive the tangibles, we will debit to the particular account. So example, I said cash received debit to cash account. If tangibles are given, right? If tangibles are given, it should be credited to the particular tangible account. If you can understand this rule, and if you know how to apply this, it's very easy to deal with the correction of errors. 90% is depend on this rule. So any tangible given to be credited to that particular account. Example, cash given credit to cash account. Once again, cash given credit to cash account. Without switch on the mic, everyone together. 1, 2, 3. Cash given credit to cash account. Furniture given furniture account. Furniture given credit to furniture account. Cash given credit to cash account. Furniture given credit to furniture account. Likewise, can you write 5 and send a message again? Done. Quickly, make it fast. Tangibles, we use this rule. Any tangibles, we use this rule. Receive debit, given credit. You learn the way that I ask you to write it. Then it is very easy for you to remember. You won't make mistake in that. Okay, right. Now let's come to the next one. If it is an intangible thing, how do we apply this rule? If it is an intangible thing, before we come to intangible thing, tell me the 5 types of accounts we learn. Assets, expense, equity, liability, income. Asset, expense, equity, liability, income. In the tute, you can write these rules. I have given the rules for double entries. I will tell you when we come to the tute, I will tell you where to write. Okay. So types of accounts: asset, expense, equity, liability, income. These asset and expenses are, when you come to the intangibles and balances, same rule we apply. Already we learned this in many places. Intangibles or balances mean we use the same rule. Asset and expense mean debit side, equity, liability, income, it is credit side. Any intangible, if you get, first you have to categorize the type of the account. Any intangible or balance, both same rules. You have to categorize the type of account. Then you can decide asset and expense mean debit side, equity, liability, income mean credit. For example, salary. Salary is an expense, intangible. Intangible expense, debit side. Debit side. When you come to intangible, another example we can say discount received. Discount received is an intangible thing. A discount received is an income, so it is credit side. Discount received account, credit side. Why? It is intangible. You can't see the discount received. Discount received means we are not receiving anything. You can't see. Intangible. It is credit side because it is an income. Likewise, another example, if I ask you, send me the answer debit or credit. Send me the answer debit or credit. It is, say, discount allowed. Why it is debit or why it is credit? Tell me the reason. Post your answers in chat. If debit, given credit. Writing the note is easy. You must know how to apply this. That is what I ask you to write 5 examples. You learn this double entry through that example. Theoretically, anyone can study. Even in the book also, we can learn this thing easily, right? Theoretically, we can read this in the book. It is very nicely colored, printed, everything there in the book. We must know how to apply this. That's the point. We must know how to apply this. That's the point. Okay. Now we come to intangible. Intangibles. If it is an intangible, how do we apply the rule? Just now I told you. Asset and expense debit side. Asset, expense, debit side. Okay. Asset and expense, debit side. Then what is credit side? Equity, liability, income. Note it down, huh?
So in double.
Yeah, in this rule, I have given two boxes to you, double entry accounts. Asset and expense, debit side. Equity, liability, income, credit side. Okay. Balances in ledgers also what? Same rule. For balances also we write the same rule. Balance and intangible, same rule we have to apply. Asset, expense, debit, equity, liability, income, credit. Okay. Anyone have doubt? Land and building asset, furniture asset, cash is asset, debit side. Capital is? I am asking what type of account? It's an equity. So it is credit side. Very good. Equity, it is credit side 230,000. Most of you correct, some are wrong. It's an equity, not asset. Huh? Capital is an equity, not asset. Stocks, asset. Stocks mean goods available in the shop for sale, 15,000 asset. Interest received. Interest received. It's an asset. Sorry, it's an income. Interest received is an income. So credit side. Interest received is an income. So credit side. Debtors mean, I forgot purchase. I'm sorry. Purchase. Next time. Purchase is an expense. So debit 126. Purchase. And we missed the sales also, right? No problem. Sales is an income. Credit side. Sales is an income. Credit side 125. Right. Likewise, we can fill the table easily. Debtors, asset, debit side. Creditors, liability, credit side. Rent, expense. Machinery repair, expense. Interest. Interest is, everyone send the answer for the interest. What type of account is interest is? Every transaction has two accounts. Capital introduced by the owner in cash. Then we will be having two accounts for this. One is capital account. Other one is cash account. It's easy because capital introduced So capital account in cash. So cash account. You see how easy? Capital introduce, capital account in cash, cash account. That's the first point. So you can do this roughly. You can do this roughly what I am working now. You can show this working. Only the answer you have to write in the tube. If you have space in the side, you can show the workings also. No problem. It must be there workings. Then only you can learn easily, right? So capital account, cash account. Everyone, what you can see in the screen, please draw it in your craft paper. Don't use ruler. Just put a small note. Then only you can learn easily. So capital account, cash account. In these two, first we have to find, do you have any tangible? Of course. In these two, is there any tangible? Tell me. Send a message, my dear. Is there any tangibles? So we can say the tangible is cash. So the rule we know, if you have a tangible, the rule we learn, I taught you, cash is a tangible mean cash received debit to cash account, cash given credit to cash account. According to the rule, capital introduced by the owner, so we receive money. We are inside the business, I told you in the previous slide. We are inside the business. So when owner introduces the capital, we receive money. We are inside the business. We are not the owner. We are the accountants. So we receive money, cash received, debit to cash account. Is that clear? My dear students, any doubt? Yes or no? Tell me quickly. Any doubt? Yes or no? Tangibles are received, cash account debit, automatically the bank capital account, it goes to credit side. When we write the double entry, when we tell the double entry, when we write the double entry or when we tell the double entry, you have to write the debit first. When we are finding tangibles, debit, credit, that is no harm. That's rough working. All these are rough working. Huh? These are rough work. Where you can write debit, credit, that is no matter at all. But when you write the answer, debit should be written first. When you write the answer, you have to write the debit first. So, how do we write the double entry? Cash account, debit 50,000. Capital account, credit 50,000. My dear student, when we write a double entry, you can't write comma, comma. You have to write one by one. Debit first line, credit second line. I saw one student wrote cash account debit 50,000, comma, capital account credit 50,000. Whatever double entry given, he has written comma, 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 not up and down. I was worrying. Why? What's the reason? I went through the book and I asked, why did you write like this? He said, sir, I thought we don't have space. That's what you write up and down. I thought you don't have space. That's what you write up and down. I have space. Therefore, I'm writing comma, comma, sir. That's wrong, my dear. Double entry, you have to write up and down. First line debit, second line credit. First line debit, second line credit. Okay, so capital introduced by the owner, we receive money, capital, we receive cash, cash account debit, capital account credit. Let's see one more second example also. Capital introduced by the owner of furniture 70,000. Two accounts, capital account, owner of furniture, so furniture account. Capital account, furniture account, because capital introduced by the owner of furniture. Since the furniture is tangible, when owner introduces the capital, we receive the furniture, so furniture account debit. If furniture account debit, capital account credit. You must remember which one we got first. If a student absent to class, if you see only the answer which is in the screen, my dear, you can't understand anything. You must know first we got furniture is a tangible thing, debit side. We received the furniture. That's the point. We received the furniture, so furniture account debit. Therefore, capital account credit. So how do we write the double entry? Furniture account debit 70,000. Capital account credit 70,000. I hope you understand. I hope you understand. And my dear students, please write the answers for question number 1. Sorry, question number 1, which you can see a trial balance. I stop. That one just after class finishes. WhatsApp me the answer. WhatsApp me the answer. Question number 2, Puta. 2 students, listen carefully. Question number 2, I will share that screen. Wait a minute. Right. In this question, 1 to 13, only 1 to 13, or else 15 we go. 1 to 15, that's enough. 1 to 15, send me the answer if possible today itself. If anyone want to try up to 22, no harm. You are welcome. You are welcome. So these answers I need it today itself. Just after the class finishes, you send the answer for first question trial balance. Within the day, try to send the second question answer. I am giving you time up to 15. If anyone would like to try up to 22, please go ahead. You are welcome. Okay, boys, students. Okay, students. I'm leaving. I have to go to the next class. Yes, any doubt? Yes, tell me.
Sir, now purchase is in cash. Cash is also debit and purchase is also debit. Now then how to